Namaskar, friends. A warm welcome to you all in this new episode on fundamental stock analysis. Hope you and your near and dear ones are safe and healthy. Today's episode is about a pharma company. This company launched its IPO just last month, that is August 2021, at the price of rupees 720. Despite of robust fundamentals and attractive valuation, this stock saw a tepid listing and currently it is trading at rupees 675, almost 7% discount to its IPO pricing. Friends, I am talking about Glenmark Life Sciences. This is the 13th company that I am covering as a part of stock analysis series. Some of the companies that I covered earlier, like Lux Industries, IRCTC, Trident, have already given returns in the range of 40% to 100% in span of just 3 months. The key to successful investing is to identify quality companies, purchase the stocks at undemanding or reasonable valuations, and then hold it for longer terms to get multi-bagger returns. Friends, my name is Milind, and once again, a warm welcome to you all. And if you are not subscribed to my channel yet, please do it right away so that you can keep getting notifications on various companies, various aspects on the stock analysis that I will covering in future as well. Couple of disclaimers before we start. The companies covered in the stock analysis series are by no means a buy or sell recommendation. These videos are created purely for educational purposes. And an investor is further expected to do his or her own research before making a buy or sell decision. So friends, let's start. Here the curtain goes up. So friends, let's see what is there in today's magic box. We will talk about the company and its products. We will also talk about the company's moat and what are future growth levers. We will then talk about the weaknesses, challenges, and competition that the company may be facing in its field of operations. Then we will look at the financials and key ratios. And towards the end, we will do a SWOT analysis, and in summary, we will see if the company is worth an investment at current market price. So let's talk about the company's products and services. So Glenmark Life Sciences is R&D driven API manufacturer, and it has 120 APIs under its portfolio. Now friend, let's understand what is meant by API. The full form of the API is active pharmaceutical ingredients. API refers to an active ingredient that is contained in the medication, and this ingredient is responsible for curing the illness. For example, you must have heard about crocin tablet. Crocin tablet is used to treat the fever and body ache. And crocin contains a paracetamol. So paracetamol is the API for crocin, and this API gives relief from body ache and fever. So Glenmark Life Sciences has around 120 such APIs under its portfolio. It has around 540 client base. So around 540 pharma companies are its clientele. It has 16 of the 20 largest generic companies at its client, and it has global diversification of the clients. The company's client base spans across North America, Europe, Japan, India, Latin America, and rest of the world. So friends, let's talk about the key segments from where the company derives its revenues. So 90% of the revenue comes from the API business. Company develops both generic API as well as complex API. The 8% of the revenue comes from contract development and manufacturing operations or CDMO. So friends, let's understand what is this CDMO. So friends, bigger pharma companies outsource various aspects like drug discovery, drug manufacturing, initial clinic trials to other pharma companies. So companies like GLS that gets these kind of contracts, they are called the CDMO companies. And this outsourcing helps bigger pharma company in terms of the scalability, or these companies can focus more on drug discovery and drug marketing. It becomes a win-win situation both for the companies, those are outsourcing, as well as the companies like GLS who are getting the contract as a part of that outsourcing agreement. And these CDMO contracts are a high margin business, and hence in future if GLS is able to increase the revenue share, then its margin will also expand. It exports accounts for 43% of the overall revenue, and it has a very high focus on the high quality standards. Friends, its facilities has been inspected for around 38 times by various global regulators like USFDA, Health Canada, other European regulatory agencies. And since 2015, friends, it has not received even a single warning letter or an import alert. So friends, these various global regulations or these various global regulatory authorities, they have laid certain rules, certain norms that this pharma company needs to adhere to. And if they found that if these pharma companies are not complying to any of the rule, any of the feature, then they issue a warning letter. And in case if the observations are serious, then they issue the import alert. And an import alert means that particular pharma company can't sell its product in that particular country from where it has received this import alert. And friends, since 2015, GLS has zero warning letter or zero import alert. It clearly shows the company's focus on the stringent quality adherence. Just to give an example, the leading domestic pharma companies in India, like Lupin, Zydus Wellness, or even the JLS parent company Glenmark, they have received warning letters in the past. But GLS has not received even a single warning letter. And friends, I think this becomes a biggest moat or the biggest differentiator for the GLS. The top 10 products of the company accounts for 67% of the revenue. And the company plans to launch 8 to 10 molecules, 8 to 10 APIs every year. At this point of time, as I stated, company has 120 APIs, and in future it is planning to launch around 8 to 10 APIs per year. So friends, this is all about company's product and services. So to summary, company is in business of R&D API. It has 120 APIs under its belt. The 90% of the revenue comes from the APIs. Around 8% revenue comes from the CDMO operations. Company has received zero warning letters or zero import alert in last 5 to 6 years from the leading regulators across the globe. And the top 10 products for the company account 67% of the overall revenue, and the export contribution in the overall revenue is around 43%. Friends, look at this slide. These are the various key therapies that company is manufacturing its API. Cardiovascular diseases, that is heart diseases, nervous system, diabetes, gastrointestinal health, it means the diseases related to the stomach, oncology, diseases related to cancer, pain management, anti-infectives. So these are the various areas, these are the various therapies that company is having its APIs. And most of these are non-commoditized APIs, friends. It means that the company definitely has a high margin and high revenue potential from this kind of therapies. Now let's see the company mode, friends. It is in non-commoditized niche products. So it is able to reflect the APIs in the niche and technically complex, and which reflects JLS ability to branch into other high value products. And this definitely comes with the superior margins for the company. Quality track record. Friends, we saw company has received zero warning letters or zero import alert since 2015, and its manufacturing facilities have been inspected by more than 38 times by leading global regulators like USFDA, Health Canada, etc. It is a completely debt-free company, and it can utilize its free cash in R&D and building higher capacity. It has strong relationships with leading global generic pharma companies. Friends, we saw out of the 20 bigger generic pharma companies, 16 companies are the client of Glenmark Life Sciences. So this clearly shows the brand, the reputation that GLS is having with its client base. Now let's talk about the future growth levers for the company. The first one is increase in capacities. It is planning to increase the capacity by 200 KL in next 2 years. China plus one sourcing strategy. Friends, nowadays, many global businesses are planning to de-risk their businesses and they want to move away from China. They want to create another facilities apart from China. And the companies like Glenmark Life Sciences, with adherence to the strict quality management as well as non-commodity business, are definitely going to uh, benefit from these kind of strategies. It is focusing on the areas like oncology and peptides. Peptides is nothing but the molecules that helps to build the muscles, kind of a protein related molecules, and oncology, the treatment in the cancer. So the areas like oncology and peptides will further help to increase the company's revenue. It develops 8 to 10 APIs per year, and it planning to continue to do the same in future. So more and more APIs under its belt definitely will expand its revenue as well as profitability. And CDMO business. Friends, we saw CDMO business currently accounts only 8% of its revenue. And if the company is able to expand this revenue, which is again a high margin business, then it will definitely impact company's bottom line in a positive way. So these are future growth levers. It plans to double its capacity in next 4 to 5 years. It wants to increase the market share in the existing products as well as launch the new products and make in India push, China plus one strategy. So all these various factors combined will definitely aid Glenmark Life Sciences in its future growth. Now let's talk about the concerns or weaknesses. So friends, as we saw, Glenmark Pharma is the parent company of Glenmark Life Sciences, and this GLS revenue, the 40% of the revenue is derived from the parent firm. The company will have to diversify further to de-risk its business. If it loses its market share in the key API, or if it loses its key customers, then that could be a challenge or that could be a threat that needs to be monitored. Any negative observations, warning from global regulatory authorities, any import alert, that also needs to be watched. And company is planning to launch the company is planning to launch 8 to 10 molecules per year. If it fails to do so, or if it is not able to expand its capacity as planned, or the CDMO business, the contract developed and manufacturing operation business, is not taking off as per plan, then it could impact company's future revenues and profitability. So an investor needs to keep a watch on all these aspects if he wants to invest in this company or if he is invested in this company. So friends, as usual, I have divided this video in two parts. So we are coming towards the end of part number 1. In this part, we talk about the company's products and services. We saw the company's moat. We saw the future growth levers. And we also saw the company's weakness and challenges. So friends, don't go anywhere. Stay tuned. Part number 2 is immediately coming. And don't forget to like and subscribe to my YouTube channel.